The government may have gone back on imposing a surcharge on some FPIs, but that's clearly not done the trick, with India staring at the largest ever quarterly exodus since 1999. Foreign investors who pumped in over $45 billion over the last 6 years have been selling shares almost every single day in the second quarter. Ronojoy Mazumdar of Bloomberg News joins us with more details on this one. Ron.
So, as you mentioned, this is kind of the fastest pace of sell-off of Indian stocks that foreign investors have been doing in a very long time. And what we were doing when we were speaking to investors is really trying to get a sense of how their view has changed in the last kind of 6 years of Modi being in power. And what we could see is a very clear kind of lowering of expectation. There's not the same really excitement that was there in 2014 when the government was coming into power. These foreign investors have recognized that some very important reforms were passed in the previous term, like the IBC, GST, but now they're looking at growth at a 6-year low. And many of them were considering India as somewhat of a shelter from the risks of the trade war. But that was really, it kind of hinged on the consumption story staying intact in India domestically. With that not really coming through, many of them are not seeing where growth will come from now without significant structural reforms.
Okay. Was there a feeling among investors saying that things will get better from here on, or they've written India off?
Probably not yet written India off at this stage, but they need to see some kind of positive direction in terms of policy making. I think a lot of the incremental measures that the finance minister has laid out in the last few weeks, they're all welcome, but I don't think they will move the needle as much for foreign investors
to actually go and make those investment decisions.
Exactly.
Ron, thank you so much for joining us.